I'm Jeremiah Boucher, a commercial real estate investor with over 20 years experience. This show is designed to help you build your business, become a better real estate investor, and help you see opportunities that will keep you ahead of the competition. This is Finding Your Edge. Industrial across the country for small operations or small tenants is through the roof with vacancy.
On a corridor, on a highway corridor, about a stone's throw away. And
Location.
what I was thinking about was, okay, what's the biggest problem for investors, besides making sure their operations are, clean and lean, is financing. But if financing's in place, then you don't have to necessarily be too concerned with what's going on today in the market with financing, because if it's, if you have it spread out long enough, if the person's going to hold it for long enough, you have quite a bit of leeway where then, you can make some choices after 5-6 years. And then, that whole, the new saying, survive till 25, there's probably some, truth to that, right? Survive till 2025 when potentially, hopefully the rates go down, but we can't bank on that. But those are things that, we're looking at. And yeah, I think the two things that our edge is finding the deals and then negotiating for a seller financing type strategy. Those are our two things that we can do very well currently.
100%. And that's where in this climate that opened back up for guys that are going to hustle, guys that work hard, that, that really respect the game. And then they put the energy and effort into their craft, building the relationship and then evaluating the assets and knowing how to execute on it with creative terms. This is how I won. This is the opportunity that I got into commercial real estate in 06, 07. Everything crashed 07, 08. So 9, 10, 11, 12, that's where I completely shifted my life because of that environment where it was very hard, but the window opened up as well. And so there's always a good time to get into business. So for me, I love that. So right now I would say, evaluating opportunities. The thing is, Marty, now the nice thing about when the game evolves and you get more money, more investors, more track record. Now you don't have only one strategy of owner financing. Now an all cash offer looks completely different than it did before 1 or 2 years ago.
No doubt.
So I've been shifting with my guys with, availability of our funds and having some liquidity is I better get a 20 to 30% discount where I have a really high 9 to 10% yield on cost on the asset if I close with cash quickly. We just did that.
Absolutely. Oh, good. Yep.
Yep. So that is in the arsenal. And then you also have, if you do have access to bank financing and a relationship there, once again, even if you do use a bank, a lot of other people can. So it gives you another advantage where if you can get a competitive rate with your good banks, you're there. You can get an edge on your competition in some of these assets that aren't institutional grade. And then the last strategy is still the master lease. It's going to come. It's going to come back. When you definitely get back in, when you're into the markets and you don't have a lot of cash, or you want to keep your cash so precious, you don't want to deploy it. It's coveted. You and your operations business with your apartments and your industrial, is dialed in Rochester. You say, hey, look what I got. I got to go drive by my other buildings. They're amazing. So I can master lease this. I'll give you first and last months. You don't have to deal with anything. Give me a 3-year lease. I'll fix it up. And then this is my fixed price to buy you out and a problem off your hands. So
those are going to be a lot of fun. I pitched these, right? I pitched these and have been close on those. And for those who don't know what a master lease is, Jeremiah, can you just go into that a little bit about what exactly that is and maybe how you would in this market, or maybe what you're looking for? Who are those potential clients who would be open to doing a master lease with you? If you could just speak on that, because I think this is going to be a really good clip.
Yeah, I would say so. Let's use the real life example. So since you have a multi-tenant building, an apartment building, or you have an industrial building and you have multiple tenants. So the seller is at the stage of their career where they don't like managing the property. The property needs more improvements and they're really not up to speed or motivated to even want to try to now take the asset to another level, improve it and lease it up and deal with the tenants. So if it has low occupancy or it's completely mismanaged, what happens when there's no financing available and the buyer pool dries up, especially when what we're talking about right now, where you have no cash flow because you mismanage the asset or your rents are really low and it's a troublesome asset to deal with a lot of non-paying renters. the seller would now start to look at, okay, I don't want to manage this anymore. I'm tired of this. And it's not an institutional asset. And I got all these yahoos trying to manage it and they're not doing a good job, nor do I want to put any money back into it. So this guy comes to me who wants to buy it, but he says, hey, the debt coverage is not there and you're not going to sell it to me for, 300 grand. You're not going to find the deal like Marty just found. You still want $1 million. So what I say is, hey, I'll give you $1 million, but I don't have 200 grand to give you as a down payment and 200 grand to put into the asset. So I'll give you your million. I get an option. So let me buy it for $1 million and I'll buy it over the next 3 years. But what I need in the meantime is I got to control the asset. So what I'm going to do is I'm going to be one tenant. I'm going to be your only tenant in this property. And this is going to be the flat rate that I pay you. And it's basically what you're making right now. But I deal with the taxes, insurance, management, maintenance, utilities, and anything else. So I'm going to deal with all the expenses and I'm going to pay you one flat fee. And then I have a fixed price for 3 years and I'm going to pay you rent. And then from there, I get to make the improvements to the property. And then once I get it filled up, or I get to collect all the rents every month, I'm going to collect from all those other people, all those other multifamily or all those other industrial tenants. And I get to keep the profit. So from there, that's what it means, Marty. It just means that you sign a lease with the owner where you pay all expenses and you pay one flat rate, and then you go out and then you collect rents from all the tenants that are there. And you need to be able to add value to that asset. There's no real reason to do the strategy, but what you're doing essentially is tying up an asset, controlling it, using your operational advantages by making improvements and improving and adding rents, and then getting your fixed price, paying it off, paying the seller his price, but then creating equity and value while you control it versus putting all that money towards buying it and not having any money to actually improve it and to operate it.
Those are going to be all over the place. They really are. If you are a hustler, if you're willing to have the conversation, these are not going to be on the MLS, right? These aren't going to be on LoopNet. Okay. These are made, these types of deals. These are made through having a relationship and having that, belly to belly type situation with the seller. And they're there. They are going to be there because they're going to be in a position where there's not another dummy to buy this thing. There's not another dummy to be able to get the financing to buy this thing. And they're going to need somebody who has strong operational skills and that is willing to do the dirty work. The dirty work is collecting the rents, going in there and getting people on longer term leases, going in there and cleaning out the bad debt, going in there and, cleaning the place up and putting the paint on and doing the things that nobody typically wants to do. And it doesn't, like I said, it's not just something that's going to come across your desk. You've got to make these types of deals occur, right? They don't just happen. You have to make them.
You do. And they could be on LoopNet. They could be on Crexy, but they're not going to advertise it. And you're going to have to.
That's what I mean.
Right?
Sorry. Yes,
Yeah.
Correct. They might be on LoopNet to sell, but they're not going to tell you, hey, we're open for a master lease. You got to sell that on why they should work with you on doing a master lease.
Yeah. And that's organization and follow up and it's patience and just watch them. Like you said, no one's there to save the day, especially if it's not stabilized. So it's awesome, man. So not worry about rejection. Have resolve and conviction in your strategy. This stuff is real. It's not, but you do have to have an operational aspect to the asset where it can't be a triple net, perfectly paying Walgreens tenant. That's right. Ridiculous. Yeah. So right now, looking at those 4 strategies, right, Marty, with financing, it opens up. That is going to be directly correlated to if you make the decision on utilizing your cash on a deal. That's right. You either do all cash quick, owner financing, conventional bank financing, or a master lease. So look at the asset type, make sure it fits in your wheelhouse, look at your region. Does your region have long-term potential? Do your homework. We've talked about it before, but if you don't have population growth, do you have income growth? Do you have housing starts? Do you have a stable job market? Do you have at least somewhat of a good, decent base of a working job market? Is there too much supply? Is there not enough supply? All those things you need to do your homework on because that's long-term strategic thinking that you got to be ahead of, that only you as the operator or the investor get to decide. Yeah.
Yeah. And a lot of this stuff too, this comes with time in the market, right? There's timing the market, which is something that you can do now.
And that was the 4th thing, timing in the market. That is spot on, man. That's exactly right.
Yeah. So we're on it today, boys and girls, but it's, time in the market is always going to be better than timing the market. Now, when you get to a sophisticated level that Jeremiah is on, and you can start to really pick up on things and you can see what the big boys are doing and you can actually start timing the market. You're in a position where you can. But for people just starting off, this is for me, having the time, literally the time in the market. And when he's talking about the housing stats and the supply, and those are, I don't want people to go, I'm never going to know that stuff. I'm just going to not do a deal and I'll just, hang out and keep my 9 to 5. And maybe you should. Okay. And maybe you should. But for those who are willing to be in the arena, that's a phrase that's being hot right now is, are you a man in the arena? I think that, you know, not everything is going to be perfect or look like a perfect green light when you're buying in your first phase of the game when you're first starting out. But I believe that if the financing is right and you can get the financing that you think, and for me, it's seller financing is the best, or some sort of master lease, you can learn a lot. My thing is I want to be able to really be somebody who understands my market. And the only real way I can do that is by taking a risk on that $75,000 down, right?
Yep.
Because worst case scenario is on something like that, you have to, walk away from that $75,000. Okay. Because again, it's seller financed. I'm not signing any papers for a bank, but I'm going to be able to, and I know I'm going to win. Okay. First off, if you know you're going to win, you're going to win. You're going to make it work. You just will. But I also know that being in there and learning the business by buying, not by buying another course. Okay. Not by buying another, mastermind, but by buying something where you can go, hey, if I buy this, it's not going to kill my family. It's not going to kill my business. I think there's a lot of value there. Do you think that's fair to say? Would you say that's true? Or would you say, no, man, I think, or what would you say there?
Yeah. Oh, man, Marty, 1,000%, man. That's where the real growth happens right there. And you do it. You're committed to it. You have conviction around it. This is what it takes. So if you're an active investor, an active operator, you got it. Like you said, be in the arena, and you can do a lot of things with that education, which you did, and you need to be educated. There's no way I'm running into a fight or going into a game and not having a game plan, not having reps underneath me, not looking and learning from other people. We've been talking for now 2 years. So and I know you've been learning from other people. So it's not like you just came in this thing and you just threw out some money on a deal that you found online. You put
No
a lot
doubt.
of preparation, right?
No doubt.
So it's all about preparation. And then, yeah, but then you got to take a shot. And you don't know. You don't know. Yeah, but you got all the right things. The wind is in your sails. You got the current. You're riding the current the right way. You bought at a great cost basis. You got great terms, so you limited the downside. You got an asset that's in demand and has a good location. So those things alone, even if you got to go over some environmental humps, you got to go over some capital expenditures where you got to fix this thing up. You got to figure out the leasing a little bit because you're not sure exactly what these guys want at the end of the day in the
No
asset.
doubt.
All you're like the tide or the current is already in your favor. Where that's why we got in real estate, and
Right.
it's a hard
Right.
asset that real people need to have and use in businesses
Right.
because real people have real problems that have to fix their house and improve their properties and do everything else. Like people need space. This is in need. And there's a lot of people around you. It's a very established market. So any way it shakes out at the end of the day, you're playing the right game before you even put the chip on the table. So it's really, and that's what I suggest for people. It's like really putting the time in and that preparation and and do it. If they're listening to this or you're listening to any other podcasts, yeah, you can go down that rabbit hole of just paralysis analysis, and
Yep.
and then you get into that whole self-help, just going to things to get pumped up,
Yes.
and you got to pull the plug on that and go play the game,
Yes.
and you know, and then at that stage, that's where then come back a year later, 6 months, a year later, and then you got a whole new perspective. Like, oh Jesus, I got to figure this out now because I sat in the class, but it didn't really make sense until the tenant's saying, I'm not paying my rent, or you better fix this thing here. And you got to pay your debt, pay your investors, pay your family. So yeah, I agree, man. It's the best way to learn by far.
I love it. I love it. I think that's a fantastic way to wrap up. Do you have anything else you would like to end the show with, Jeremiah? Besides the Patriots versus the Eagles here in about an hour, in about 25 minutes Eastern time. Hey, look, you guys are you're in my you're in my area, New England. And so I don't want the world champions to win, or not the world champions, the previous world champions, but I'm not an Eagles fan, but I root for them because of you. So if it's not the Bills, I do New England now because they're they are really the underdog now in this, which is crazy to think about. They're the underdog. But what do you want to leave it with? And what are your thoughts on the Patriots for this coming year?
I'm glad you asked, because I called my company the Patriots because of the culture. I'm so focused on culture. It took me a long time to get to this stage where I knew it was important. And we've all grown up doing team sports and individual sports with wrestling, but even then you got a team behind you. So it's really about in terms of the culture that I learned by reading about Bill Belichick. And it's really about having standards and really having the right personnel, the right people around you, and that those people buy into that culture. And then that translates to every single person in the organization. So I think that, and that goes to not only the Patriots, but even your team, Sean, they abide by, having the right way, the right culture. And Belichick, I think, really dictated that, and especially a time in the NFL when everything was flash and it was a big mess with prima donnas. They stick to the same culture every single year. So we can get into that more, but either way, I respect your team. And I think that through it all, they're going to continue to come out on top because they don't buy into any of the hype. And it's all about the culture and having character, integrity, values, accountability, all the stuff that you could just keep going on. That stuff is the stuff that creates dynasties right there.
It really is. And then speaking of dynasties, just quick for everybody, we got little Marty on the show here. This is the dynasty. This is what I'm doing it for. You got to find your wise, a future Bills player or at least a future Bills flag football player. All right, Jeremiah, I appreciate you, man.
All right,
Great show. Take care. Go Bills, go Patriots, my friend.
It's his mom. You got those beautiful eyes from his mom, definitely.
Yeah, not from me.
See you guys.
See you guys.
Marty Jr. Bye, man.
Take care. Bye.
For more information on commercial real estate investing, go to patriotholdings.com. Thanks for listening to Finding Your Edge.